Joining us now on the Megacast is Jason Brown. He is a stock market coach from the Brown Report, joining us once again on today's edition of the program. Jason, thanks for being with us.
Tyler, I'm excited to be here. Thanks for having me.
Yeah, glad to have you on. So, as people are going into the stock market or are continuing to invest their hard-earned money in the stock market for a variety of different reasons, and this is something we touched on the last time you were on, either they're trying to kind of not necessarily gamble with their money, but try to, get a quick turnover in some of these investments, or they're making true investments for the future and going for long-term gains. But before they make any of these investments in any certain stocks that maybe they're looking into, what are some questions they should be asking, and what are some details they should really be looking for from one stock to another?
Yeah, so one of the things I'm passionate about is taking the complicated and making it simple. And so most people think trading or investing is gambling because they're not sure what to look for. So, three of the things that anyone should look for and could look for without having to go to college for this stuff or feeling like they need to get some Series 6 or 63 license is number one, sales, number two, revenue, and number three, their earnings. Now, most of the times when you hear that, you're like, okay, what does that mean? So I want to show you, I put together an example to show the listeners and the viewers how it forms the story. So if I may, can I walk into that example?
Sure, absolutely.
Perfect. So I want you to think about this. I want to use something that most people are familiar with. Most people have an iPhone or some type of smartphone. So when you look at the company Apple, and you can apply this to any company that you're thinking about investing with, instead of just asking your friend, do you think it's a good company? First thing you want to look at is their sales. So they have to sell something to bring in some money. And so if you look at Apple, you say, wow, they sold 1 million iPhones. Okay, but is that good or is that bad? And so sales is one component. So we know that they sold something. We know that they sold 1 million of that something, that iPhone, but we still don't know if it's good or bad, which is where we go to revenue. So now we get a little bit more information and say, well, what was the price that they sold that iPhone at? Let's just say they sold 1 million iPhones. So we got sales, but they sold it at a cost of $1. Now we have revenue. So we can say, wow, they brought in $1 million. So now we have more pieces to the story. We sold something, 1 million phones. We got a cost at $1. So we have $1 million in revenue. But once again, is that good or is that bad? So now we have to go to earnings. And earnings is going to bring in a new component, which is, well, in order in terms of good or bad, how much did we pay for the iPhone to make one? And so with that new information, let's just say it costs Apple $100 to make an iPhone. Now we have one piece of the third component. So we got a million units sold. They sold for $1. We have $1 million worth of revenue, but we just found out it costs us $100 to actually make an iPhone. So that technically means we lost $99 million. Does that make sense? So now we're like, is that good or is that bad? Now we're like, okay, that's not as exciting. At first I was excited. We brought in $1 million in revenue. But now that I found out we lost 99 million because it costs us 100 to make the phone, that's not necessarily good. But the profit statement or the earnings statement is also going to tell you where we did, if we did profit from. So what if they then gave you the last piece of information and said, but wait, out of the million people who bought the phone, yes, it cost us 100 to make. We sold it for $1, so we lost 99 million on selling the phone. But every last one of those people signed up for iTunes and they paid $10 a month. And the average life of a subscriber is about 12 months. So now we get to understand that we really make $10 million a month or $120 million a year. So we're willing to lose 99 million on the iPhone, selling it, get the unit out there, because the real profit comes from getting people to sign up for the music subscription, which brings us 120 million a year. So now we net profit, or should I say gross profit, $21 million a year. And then they start to back out things like, how much do we pay our employees? How much do we pay for our buildings and equipment and different things like that, or healthcare? And then you're left with the profit. But what I really want people to understand is if they know those three things, what are the sales, what are the revenues, and then when they go to the earnings statement, they can see where they lost money, but where they made the money back potentially, or maybe they didn't make the money back potentially. And now people have a better or simple basis to learn from themselves. Is it a good company? Is it a good business model versus just going in some random forum or asking a friend, do you think this is a good stock? They can look all this up because it's public information and they can have a better confidence and feeling about the stock or the company that they're buying.
So you mentioned this is public information. Where can people find that information so they can do these investigations?
So, great question. So, because it's public information, the companies have to publish this quarterly. So, it's called a quarterly earnings statement. So, there's several different places you can find it. Every publicly traded company has an investors relations page. So, you can go apple.com/investor relations. You can go to Best Buy/investor relations. That's one place. You can also do something even more simple and just go to CBS Market Watch, which most people are familiar with CBS Market Watch. When you type in the company's ticker symbol, there'll be a tab that says financials. The problem is just most people don't know what they're reading until we just broke it down like we did here. So it's going to say sales, it's going to say revenue, and then it's going to be an earnings section. And in that earnings section, there'll be stuff like um, taxes that they pay, depreciation, amortization. But without getting fancy with all of that stuff, because they're gonna line itemize every single thing. Big picture, people just need to know sales, revenue, and earnings. What did they sell? How much of it? And then are they making money on it? And if they want to get fancier, they can kind of dig into the financials and say, oh, they lost money because they bought a new building, or they lost money because they implemented a new tax code which changed how much money they would make. So that's what Wall Street looks at to make a decision if a company is a quote unquote good company or bad company. Even if they lost money, they're like, well, they really made money, but the tax code changed. But for the average person, if they could just look up those three things, they'll be in a better situation of feeling good about the companies they purchase.
As they're looking at those three things, maybe they see a lot of good news in that. They see that the earnings are high. They see that the revenues are in check, and they are looking through all the financials and realize that the costs are relatively low. But sometimes that's not necessarily meaning that the grass is greener over there. What are some of those red flags that they should be looking for as they're investigating some of this information, and that should make them take a step back and either do even more extensive investigating or forego purchasing any stock in this company or that company altogether?
So yeah, such a great question. So first, you want to get those three down, but then you can start to advance your knowledge because the market is forward looking. So what the market, or what Wall Street, I should say, when I say the market is looking for, or hedge funds or big investors, what they're looking for is to take it a step further and say, okay, so Apple sold 1 million iPhones. How does that compare to last quarter? How does that compare to last year? So now that you know what you're looking for, you can start to do comparisons, and Wall Street will say, wait a minute, last year they sold 2 million iPhones. Sales are slowing down. That might be a red flag. Why are sales slowing down? But then they might take it a step further and say, well, they doubled the price of the iPhone. So sales are slowing down, but they're making more per unit. So we're okay with sales slowing down if they're making more per unit. So it's more about the story that's going to give you the red flag or the green flag to keep going, as long as you understand the core components. And then sales could be up year over year or quarter over quarter. Revenue could be up because they raised the cost a little bit, but perhaps there is some new law or something that is going to, or maybe we have some headwinds and they say, whoa, but we're not selling phones in Russia or Ukraine because of the war. And also, we got into an issue with China, and 25% of the phones are being sold in China. So even though they had a great quarter this month or this last 3 months, I foresee problems of them continuing to do this because we lost China, we lost Russia, we lost Ukraine. So now you can start to pull pieces of the story and project, do you think this is going to continue being good, or do we see what they call headwinds that may push them back from continuing on this awesome path or trajectory?
We're joined by Jason Brown, a stock market coach and trader at the Brown Report, joining us on today's edition of the Megacast. You can find more information on thebrownreport.com, thebrownreport.com for more information, and sign up for Jason's newsletter to get more helpful tips. So, Jason, as you're looking at those kind of core three principles, sales, revenue, and earnings, when you're looking into making these investments, how does that information you're looking into and what you're looking for to make that informed decision, how does that change for someone that's trading versus investing?
That's a great question too. So when you're trading, you're more so trying to take advantage of a pattern that is happening at the moment, or they call it technical analysis, right? And so when you're trading, you might not necessarily care about what happens year over year, month over month, quarter over quarter, because you're just looking to take advantage of what's called a chart. And so when you look at a chart, there's these levels called support and resistance, which are prices where basically the market is saying like this stock is oversold or undervalued. And then as it goes back up, there are levels where people in the market and people are saying, I'm not willing to pay that price for it. And it's hard for the stock to break through. So it turns around and sells off. And so when you're trading, you're looking for those levels of where it's a good deal or perceived to be a good deal from a price standpoint. And then you're looking for those levels where it's overpriced to potentially take your profit. And to do that, you don't necessarily need to look at sales, revenue, or earnings. You need to look at a chart the same way that the weatherman looks at a map. You're basically just trying to say, is it an 80% chance that it's going to rain today? I don't necessarily care what's causing the rain, if it was a tornado, if there's a heat wave. None of that matters, which is sales, earnings, and revenue. You're just like, I looked at the weather map and it's an 80% chance it's gonna rain today. I'm gonna go out and sell umbrellas and see if I can make some money because it's an 80% chance somebody's gonna need an umbrella today. And that's what you're looking at when you're trading versus worrying about, well, why is it raining and how long is it gonna rain? You're just looking to take advantage of a 80, 90% potential opportunity.
Jason, a couple more minutes with you before we'll say goodbye today. At this moment in time, given the still relative uncertainty that there is in markets in the US and around the world, what are some lasting tips for right now that you have for those that are investing and are trading to be looking out for given the current circumstances of our market?
So if you're investing, I know people say that there's a lot of uncertainty, but what's funny about that is one thing you can be certain of is long term, the market goes higher. That's just 100% a fact. You can look back through any depression, you can look back through 9/11, which that just happened as well. So, it just made me think about anybody who was affected by that. My heart goes out to them. But I'm just using it as an example to say no matter the tragic incident, long term, the market goes higher. So if you have the time to wait it out, you will be okay longer term. And for anybody that's taking advantage of trading during this uncertain period of time, uncertainty allows you to actually make money faster because markets move up really quick in times of uncertainty and then they fall really quick in times of uncertainty. So you can get in and get out and make some pretty sizable income if you know how to do it. And I'm not saying it's all risk free. There is risk to doing it. But if you know how to do it, you can become really rich in a short period of time during uncertainty.
TheBrownReport.com for more helpful tips and information as you are trading and investing in the stock market with stock market coaches like Jason Brown. Jason, appreciate you joining us.
Thank you for having me.